Good afternoon, ladies and gentlemen. It is the 10th of August, 2023. I'm going to do a quick look at MES. That's the micro E-mini for the S&P 500 index futures contract. First, we're going to look at what the market is actually doing as far as price action. Thereafter, we're going to take a dive into the options chain and see how we can build a strategy around a bias. Uh, so we're going to go over a few things. I think that it'd be good to take a little bit from everything you see here and apply it to your goal, your strategy. Try to be very conservative and focus on high probability. So anyway, let's look at the daily chart here for MES. As you can see, we've been riding a range or a channel, I should say, since March. And we're still in that channel. Right now we're crossing the middle point of that channel right now. Kind of look, you can make an imaginary line in the middle of the channel. You'll see that we're a little below the middle point of the channel currently. Uh, so another thing to notice is that we are below the 5 and 8 moving averages. That's the 8 SMA. This is the 5 EMA. They're crossed down, and we're currently riding below it. Today's price action, today was CPI numbers, by the way. In today's price action, we actually peaked above uh, both moving averages, but we had a failure and we went right back below. Another thing that I'd like you to see is that the volatility index uh, has been, this is the daily chart for VIX, and on the volatility index, we've been below the 200 EMA for quite some time. We've gotten some peaks above it, but they've been short-lived. For the majority of the time since November last year, the 200 EMA of the VIX has been in full control, and we're super low, extremely low here on the VIX, down here at 12. We've gotten a few touches down here at 12. This is even lower than we were back in 2021. Uh, so as you can see, during 2019, the pandemic, uh, it was crazy then, but we had some points in time where we were even down as low as 11 on the VIX here, as you can see. So something to keep in mind whenever you do have a direction in mind with your trading is that if the VIX does not tell you that the market's going up or down or has a clear direction, I should say, then it's best to be very careful. Uh, if the VIX is super low, typically that means that the bulls are in full control, and if the VIX is super high or expanding, let's say, then that means that we have higher volatility. Volatility is infiltrating the market, and we should see uh, selling pressure across the board. So that's typically what we're going to see when that happens. Right now, as you can see, for the past few days, if you're looking around this area here, you can see that we have just went back and forth and back and forth, pretty much in the range above this blue line, the 55 EMA, and below the 200. And you can define a range also by, let's put a square around this. Let's try to capture the bodies of the daily candles here. And if we were to do that, we can see a good range here. And something else that we can do is we can say, okay, well, the middle of this range is 1630. So we can put a little line, 1630. Let's do that. All right, so this is the middle. And this is just a good little guiding light to say, okay, well, when the VIX does move out of this consolidation area or range, is it going to move above this line or below this line? Are we going to keep flirting with this whole box here? We want to see some kind of definitive breakout and control of price action, either above or below this red line, and then particularly outside this box would be a good thing for us to really get a direction of the market. Right now, the fact that we're above this 55 EMA, I am really leaning towards us seeing some selling pressure in the market. And then CPI numbers today, as they came out, and they were good, and we really failed to do anything substantial. We basically ended the day flat today. Being that we really didn't see any indication that people felt confident that the market could drive either direction, or especially to the upside. Uh, it just tells me that what we probably are gonna see is some selling pressure uh, in SPY. So this brings us back to the SPY chart here, uh, SPY, but we can also look at the MES, which is the futures contract. That's what we're going to base our trade on. All right, so I'm going to look at this chart, and what I want to see is a good place where I can say where I can say that I wouldn't want MES to go above this point, uh, in regards to my strategy. So I look at the rejection here. Obviously, if we were to go above uh, this 46.58 area, and we could even say 47, we'll be outside of the up channel, the uptrend channel here. And then if we were to go above 46.20-ish, we'll be approaching a new high. All right, so if we were to do that, we're approaching a new high. If I am bearish, or I'd like to put a strategy that is directional and on the bearish side of this, then I might say that I like my moving averages to be sort of my stop area, or an area where I would say price actions move too far against me. So the question is, where would I say price action has moved too far against me? So what I would like to do is I like to take the bottom of the candles here, and you can see how price moved against the upper end of this channel. And then we had several days where we had support right around 45.65. I like 45.65 to be my area where I'll say that prices moved too far against me to be bearish. So I'm going to put a line right around 45.65. We'll put it at 45.60. And I'm going to make this line very definitive. And I'm going to make it black. See if I can make it a little bigger. As big as it gets, right? All right. So I'm going to label this. We're going to call it resistance point. Strategy. All right. So I'm going to make that nice and big. Can't miss it. Make it yellow. Maybe orange. See it a little better. All right. Let's align that to the right. There we go. All right. So there we go. We have a line here, a red tape. So that's at 45.60. All right. And what we're looking for is for price action to move down, and hopefully outside of this channel not too big of a deal with the strategy that we're going to put on. So let me show you the actual strategy here. All right, so let's go ahead and pull up MES on Tasty Trade. Oh, not MESS, it's actually MES. It's not a mess. All right, so here's MES on Tasty Trade here. And I'm going to pull up the options chain. And what I'm going to do is I'm going to go to the end of month contract. No, end of quarter contract, I mean. We're going to go to the end of quarter contract. That's September 15th. Right. And if you look at the options chain, you can see that the implied volatility over a good span of time is about the same. It's a very even IV here. So let's go ahead back, and we were at 45.60 here. All right, so what I'm going to do is I'm going to do a bear call vertical, and so we're going to sell a call that's closer to the money, and then we're going to buy a call further out. All right, so I'm going to sell the 45.60, and then I'm going to go 15 points out here. Let's say 20 points out. And let's buy the 45.80. Let's see how that looks. Oh. All right. So this is what I have here with this trade. Got a 61% probability of profit here. And my deltas, they're at 45. All right, my delta's at 45. It's not a very attractive delta. It doesn't give me much wiggle room, and plus my the capital required for this is not a lot. It's only 40 bucks. My maximum profit's $51 at expiration. Uh, you know, let's see how the curve looks on this. So we're 36 days out. Okay. I'm gonna shave off for this curve. I like to see how it looks when there's only 22 days left in the trade. So we're gonna shave off 14 days. All right. So let's go ahead and progress to the future. 14 days. We're at 824. All right. So this is how we look. So at what price level can I capture 50% of my maximum profit? It's 25 bucks. And this is at 14 days out on August 24th. So we're at 4444. Huh. Okay, we'll just say 4445. All right. So how does the chart look for this price level at 4445? And at 4445, we are still inside of the channel here. All right, so make a little line here at 4445. All right, so let's say, tomorrow comes and we sell down to 4445. Let's say that happens, okay? Let's go to tomorrow. So let's go back in time from 824 and let's go to 811. All right. And if for tomorrow, okay, here is 4445. We're right around a $16 profit. Right? So that is, I'm going to say that is, well, that's of course more than a fourth of maximum profit if we do hit 4445 tomorrow. Uh, let's look at the options chain for tomorrow. All right, so here's tomorrow, and 4445 is one standard deviation from current price. Uh, so that's the expected move. Uh, so it's very possible that we hit 4445 tomorrow. We may not, but maybe in a couple days, very possible we can hit that one standard deviation move. Uh, so, why am I showing you all of this? To say that, hey, we can use very minimal capital right here. And if we get a directional move in the bias to the downside, in this case, we can capture over a fourth of maximum profit per contract. Uh, and then, it's very possible that we can let this ride for a couple days, for up to 12 days, no more than 22 days left in the life of the contract. So in this case, if the contract life is 36 days, we're going to let it progress no more than 12 days. Uh, by by the time it's 22 days left in the contract, typically we want to manage the position, take it off. So uh, here's another thing we could do. If we wanted to give ourselves some more flexibility, we could adjust this. So let's look at adjusting this a little bit here. All right, so if we wanted to go down to the sell position being at the 30 delta, we could do something like that here to see how it looks. And 1, 2, 3, 4. We got a 5-point wide vertical here in this case. All right, so it requires more capital, as you can see. The probability of profit is higher at 72%. That is at expiration. So the probability of 50% profit is going to be even higher for sure. All right, your maximum profit shows at 68.75. All right, all right. So, and let's go ahead and look at the curve here. All right, so here is the analysis. We're going to continue to utilize the 4445 figure. in this case, if we were to hit that target, let's say tomorrow, we're up 30 bucks, all right? And if we were to hit the target with 22 days left, we're up $50, okay? I mean, that is well beyond half of your maximum profit here, all right? And then that gives you plenty of room to work with if you want to adjust this position at 22 days left or roll out or do whatever, you know? So that's all depending on what the market does, you know, with that being said. But what I like better is the idea of going with the 36 days to expiration in this case. That's the September 15th contract. And I'm going to go with the deltas at the 30 delta. And I'm going to do a 5-point wide strike or a 5-point wide vertical. So I'm at 46.25. I'm selling the 46.25 and I'm buying the 46.70. I'm selling the 46.25 call, buying the 46.70 call. All right. And it's going to require a capital of 208.59 and my maximum profit is 68.75. The objective is to get 50% of maximum profit. All right. Now, let's take a look and see what happens if price goes against me. All right. Price goes against me with 22 days left. All right. And let's take a look back at our line in the sand here. Our line in the sand is at 45.60. All right. So at 45.60, we're a couple of bucks. Looks like we're down less than $10 here. And let's say tomorrow price shoots up to 45.60. And that puts us right around down around 25 bucks. All right. So considering the technicals that we're seeing, considering the VIX, uh, considering CPI numbers being strong, and the market really just ignoring that, saying, okay, we've really just sold up already too far. You know, considering these factors, I don't mind being very tight on getting completely out of this vertical if it does go against me. All right, I'm completely fine with that, and I will take my chances at being very directional with this trade. It's the MES. You can trade it pretty much 24/7. So not like SPY where the market closes and you can't do anything. You watch your position, uh, do whatever it does. Sometimes what you don't want it to do. But with MES, you'll be able to control this position throughout the night and monitor, you know, its progress. So I'm going to put this on. What I'm going to do is I'm going to go ahead and sell the 46.25 and buy the 46.70. Another thing I'm going to point out is this has a maximum profit at expiration of 68.75. Let's go ahead and send this to expiration, and that's September 15th. All right, and as you can see, if price is below 46.25, that is our strike price call that we sold. If price is anywhere below that at expiration, we'll get maximum profit. Now, the goal with this whole thing is to not hold anything till expiration. There's two disadvantages to that. Anything can happen. And the other advantage is if we do get a move far in our favor, we should have captured over half of our, maximum profit anyway with this risk-defined strategy. So there's really not a great reason to tie up that capital and not put it into something else that can be very efficient at the early life stages of your contract or your strategy, your combination of contracts. Uh, in this case, it's 36 days. If I, can capture 50% within 7 days, go ahead and take the profit and look at something else. Look for another opportunity, but don't let your capital just get frozen up, basically not doing much, because as you get closer and closer to your maximum profit, typically uh, your your growth and profitability is going to be a lot slower. So anyway, the idea is to not hold it to that point, but I do want to still show you how this looks on expiration day, where below your sell strike price is where your maximum profit will always be, and then all the way below. And then as you get towards your 46.25, I'm sorry, 46.70, as you get closer to that, then your profitability zone does shrink all the way down to a middle area where you're breaking even. And then all the way down to 46.70 is where you start to lose past that break even point, as you can see here. So we don't want to deal with any of this. We should not be in this situation when following this strategy. You're putting on a vertical, you're giving yourself, but in this case, 36 days, sometimes it's up to 45 days until expiration. And you make sure that you give yourself some wiggle room to be right, give yourself time to be right. And if technically on the chart, price action has moved drastically against you, it doesn't really matter. I mean, if that happens soon in the lifespan of the trade, it's time to cut your losses and get out, at a minimal loss, as I showed you, earlier. So anyway, I hope this was some help to you guys, understanding how you can use many different tools to really put a trading idea together and also manage that trade. And if you have any questions, feel free to leave comments on the video and also click the subscribe button, please. And thank you so much. I hope you have a great trading day tonight, tomorrow, whenever it is. Goodbye.